Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, January 19th, 5:26 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video, the all-time high edition. State of the market, we're in an uptrend since the follow-through day on November 1st and 2nd, and it's worked quite well as a signal to get back into the market. And leading stocks doing their job since that signal. You can see we've got the green arrow on market leadership. Short-term green arrow, small caps, the only laggard still below the 21-day moving average. Medium term versus the 50-day moving average, and long-term versus the 200-day moving average, all five of the major indexes trending firmly above those levels. So what happened today after a nice afternoon rally yesterday? We gapped up in the morning, based for about an hour, and then basically trended higher for the rest of the day. My favorite type of day, gap up, trend up. And that resulted in all-time highs for the S&P 500, the NASDAQ 100, and the Dow Jones Industrial Average. In other words, the three big cap indexes. Mid caps regained their 21-day moving average. As I mentioned, small caps still the laggard, but at least they managed to finish green today, and they've got a lot of room to run if they can right themselves. Here was the final numbers. Big 7 up an average of 1.74%. RG8, this is our 8 growth ETF composite, all got a stochastic hook up. The ones that were lagging anyway, 6 of the 8 already had it. The other 6 joined today. That 8 ETF composite up 1.12%. S&P 500 opened up 1/3%. Nice trend up, closed up 1.23. Equal weighted, not quite as good, up 0.77. NASDAQ 100 gapped up 0.55, almost quadrupled that number, closing up 2% on the day. Equal weight up 1.62%, Dow up over 1%, mid caps up 1%, Russell 2000 up over 1%, Global 60/40, the laggard up 0.64%, in-house GROTECTION up 1.88%. Heck of a day. Definitely the way we'd like to close the week. And here's the daily chart of the S&P 500, and you can very clearly see the clean breakout above this 4,800 level, which had acted as resistance multiple times over the past couple of weeks. Now, a back test to that level would not be surprising in any way, shape, or form. We want it to hold. It might undercut. We're basically 0.8 above that 4,800 level, but you want breakout levels very often get back tested. If it does, we want this 4,800 to hold for the most part. Wouldn't be a problem if we closed below it a few times, but we want to maintain the best uptrends, as we can see here, hold this 8-day exponential moving average most of the time on their way up. Another rally like that, and you'll see bulls smiling, and you'll see the bears crying. Bears crying in their beers. How about that? There are no what bearish arguments are left when you're at all-time highs. Market climbs a wall of worry. Well, it climbed it to all-time highs, and all the naysayers have egg on their face. We don't predict. We just follow the price and volume action, and we can recognize a healthy market from a risky market. And we went to healthy as of the follow-through day on November 1st, and we've been riding that wave ever since then. NASDAQ 100, clear breakout as well. Actually made an all-time high yesterday, but putting some distance between that level. Clear accumulation on the NASDAQ 100. Also ending up over 2%, just at 2% on the day. How about the NASDAQ composite? All-time high as well. Well, let me just verify that. I can't imagine it's not. No, it's not. Okay, so the NASDAQ 100 did, but the NASDAQ composite not yet at an all-time high, going back to these levels. Let's see. The fact that the NASDAQ 100 speaks to the big weight that the big 7 have on that index. So this is back in November, December, exact week of November, Thanksgiving week of 2021. So we haven't surpassed that level yet. In fact, we've got some resistance to chew through still at that level. Good thing I checked that. I've been giving out false information, and we definitely don't want to do that. Also want to note RSP, the equal weighted S&P 500, regained its 21-day moving average today. Still has some work to do before it's back to the all-time highs, which were back here in late December. Mid caps regaining the 21-day moving average today, still with some work to get to the back of this cup base. IWM rallied today off the 10-week 50-day moving average into the declining 21-day moving average. How about the VIX? Pulled back the way we want it to off this declining 200-day moving average, and is sitting right on a confluence of the 50-day moving average and the 21-day moving average. We'd like to see that get a little bit lower, decrease volatility, and just have a smooth ride higher. We don't always get what we want, though, do we, folks? But we deal with it nevertheless because we have a plan going into it, as long as you're prepared, right? Here's the dollar. Failed at this 200-day moving average. If I turn the stochastic on, you can also see the dollar is now hooking down from overbought. If this comes back down to the lows, this is going to be a further tailwind for stocks. So we survived this strong dollar and made higher highs, and it's in overbought territory. So some weakening of the dollar would be, the bulls would welcome that also. How about precious metals? Do we care about precious metals? We do when they're leading. They're not. Really no reason to be in them when stocks are doing what they're doing. But gold is oversold on the stochastic, up mildly today. GDX, this chart does not look below all the moving averages. Bitcoin topped, was negative most of the day, a little bit of a rally. In fact, coin was way down, but you can see this positive reversal here into the 50-day moving average. Maybe Bitto trying to put in a bottom here. We drew this line yesterday. Basically, it filled the gap from this big gap up on 12.4. So critical low put in here. I'm going to set an alert at that level. 1945 today's lows. Should hold if this is the bottom, and that corresponds with the high here was 1948 on 11/24. So false breakout from failed moves come fast moves, all the way from a false breakout to the top of the range, all the way down to the bottom of the range in 1, 2, 3, 4, 5, 6 sessions. The market moves fast if you're not ready for it. Bonds, flat on the day, the broad bond. They were actually mixed. The TLT was positive on the day, meaning longer term yields came down. The TNX 10-year basically flat, closed at the bottom of the range. So price went up as the day went along, and yields came down as the day went along. That's all our inter-asset correlation. Let's hit the tail of the tape and wrap things up here on all-time high Friday. Stochastic improvement here from oversold mid caps and small caps had the crossover. 3 large cap indexes have already been fine. The G8 had the stochastic crossover also. NASI RSI still trending lower. When this turns, this will be more of a tailwind for stocks. This is heading towards oversold, and that's mainly because of the weak breadth measures. If we get some cooperation from mid caps and small caps, this will bottom before it goes into oversold territory, and that can hook back up, and again, as I said, act as a tailwind. Overbought on the dollar, as I mentioned, also overbought on rates. Some news before the open. Consumer sentiment hit its high. Actually, this might have been during the market open. I'm not really sure. Consumer sentiment highest level since July of 2021, and inflation expectations hit their lowest. So the consumer is alive and well. Up 2 days on the day count. Second close above the ADMA on the S&P. 10th above the 21-day. All-time highs on both indexes, as I mentioned. From a sector perspective, led by semiconductors. After the close yesterday, SMCI, a stock that we unfortunately got stopped out on the pullback on Wednesday, up their guidance. They're a big data center play, and it just speaks to the power that AI is having in this big data center build out across the world. That they up their guidance before they report next week, and this lit a fire under a bunch of the AI stocks, including semiconductors, because they need the chips in order to power the servers that go in the data centers. Software also strong, tech across the board, KBE and KRE, so bank strong. Also on the downside, the dollar. And some defensive sectors, and biotech basically flat. In-house on the portfolio, added to ELF, which we bought yesterday, and bought a firm. Show that setup, something that we don't normally buy, but I'll explain it here momentarily. But the bottom line on the day, gap up and trend up day. Tech leads S&P, NASDAQ 100, and Dow Jones Industrial Average to all-time highs. As I said, all-time highs are not bearish. So a couple charts. Let's start off with the new buy today, Affirm, and I want to go to the weekly chart on this. Affirm had, it was a big leader in the prior bull run after COVID. It was a big leader coming out post-Thanksgiving after Amazon reported record sales, and also Affirm as a partner financing a bunch of those sales. So it had a huge run up, and basically it just on lower volume. Look at the big volume, big blue bars here. Look at the contraction volume as it pulled back, and even this week, it's understandable because some of these weeks were Christmas. Well, one of these weeks was Christmas, but the further contraction right back into the 10-week moving average. Lower volume, lowest weekly volume of the last 4 was today. Perfect bounce off that 10-week moving average. We bought a starter today. This stock is not for the faint of heart. It's got like a 7.5% average true range, but a good setup here. Had some support at this 40 level. It was a support resistance level back over here. This thing ran from 27 all the way up to 52, so almost a double in a couple of weeks, riding the 8 exponential moving average higher before going into this correction. And you can see the low volume on the correction. Just a really nice setup here. So we got our starter today. If it gets through the 21 next week, we'll add to it, and we got the daily stochastic crossover right there. So that's the reason for that setup on Affirm. Bought a starter. As I said, it is extremely volatile with a 7.5% daily ATR. We added to ELF. The second buy is underwater. It had a gap up in the morning on an upgrade, still working off this move from the S&P 600 to the S&P 400. That's what the above average volume is, but I talked a little bit about this in the podcast, which is out there on YouTube now and will be available through email tomorrow. But so we did add to ELF. Those were the two changes. Let's do a quick portfolio review. Some really great action from the leading names that were in. AMD looked like a big reversal yesterday. Maybe have put in a top is how extended it was, but look at these volume bars the last 4 days, up another 7% to 174. And this all kicked off back here on 12/7, the day after their investor day, where huge volume came into this. And man, just what a fantastic acting stock. Not to belittle NVIDIA, which is one of our top 3 holdings, up 4.17% to now has gone from this 500 level up near 600 in less than 2 weeks. CrowdStrike, another one of our top 4 or top 5, up. Actually, this might be number 1 actually in size. CrowdStrike up 2.6%. That's an all-time high close. Well, is it an all-time high? Let me go back. I don't want to lie again. No, it's not an all-time high, but you got to, again, go back 2 years to see the last time it was at this level. And Uber, another one of our top holdings, up not much today, but nice bounce off the ADMA 2 days ago. Eli Lilly, another one of our top holdings, up 0.84%, bounced off the 21-day moving average today. And then the 2 newest ones. Oh, I didn't mention Datadog. This is our 3rd newest entry. This is having a good day as well after this bounce off this 120 level and making new highs. Relative strength at a new high also. That's our 3rd newest. The 2nd newest was ELF. The newest is Affirm. So we've got 8 names in there: NVIDIA, AMD, CrowdStrike, Lilly, Uber, Datadog, Elf, and Affirm are 8 individual holdings, as well as a small piece of URNM uranium. Bounced the 8-day exponential moving average today, and then we've got index ETFs in the S&P 500, SSO, and SPXL. And let's see what next week brings. We've got some cash for opportunities with some things that we got stopped out on. But man, SMCI, it's a tough one. It happens. Uh, there's luck involved. I mean, if they'd announced this 2 days ago, we would have been in this huge move up, but we're not. We're not going to cry about it. We're just going to move on. Some other stocks that took advantage of this, other data center type names: Dell with a clean breakout, up 6%. VRT up 5.5%, clean breakout. So there's some other names to make sure that are on your list. ANET, network related, new highs. ESTC, new highs. And Nutanix, NTNX, new highs. These are all kind of tech data center related names. And then 2 more: Snow, bouncing off the 50-day, regaining the 21-day, and finally, not network related, but maybe you wear their clothes if you go into the data center, Abercrombie and Fitch, up 4% to new highs as well. That's going to wrap it. As always, like to hear from you. Emails don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Remember, it's not how much you make in the market, it's how much of that you can keep. Stops in place as always, but right now we're focused on growing accounts with the markets on all-time highs. And with that, I'll wrap it up for the week ending January 19th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great weekend.